Now we've got banks as a whole looking very quiet in the session right now, and a Bank of Maharashtra really is no different. But we'll have CVR Rajendran, who is the Executive Director at Bank of Maharashtra. He now joins us to discuss about the trends that are developing in the company, in the bank, as well as the industry. Thanks very much for being with us. First up, let's start by talking about what's the level of deposit and credit growth that is targeted over FY13 and FY14.
Now, while the industry has grown at a single digit during the year-on-year till September, Bank of Maharashtra is able to register 25% year-on-year growth in deposits and 27% year-on-year growth in advances. Our target for the current year is 30% growth in deposits and 30% growth in advances, which at this point of time appears to be possible. One thing may be because of our small base, another thing is because of the strategies adopted by the bank.
Right. Now, Mr. Rajendran, your second quarter margins improved slightly on a sequential basis to just under 3%. What's the level of margins that the bank expects to maintain over the remainder of the current financial year?
When the rates are going down, always there is a lag effect on the deposits. Deposit gets repriced after a period. We have reduced the rates for many of our products like a housing loan and a car loan. This has an immediate impact. So September margin was little suppressed. Going forward, December should have a better net interest margin because our liability cost is also coming down going forward. So we will definitely maintain 3% net interest margin, and we can expect an improvement over 3% going forward.
Now, Mr. Rajendran, not just margins, we also saw gross NPAs and net NPAs improve sequentially during the second quarter. What led to the improvement in asset quality sequentially, and what's the level of gross and net NPA that you would expect over FY13 and, if possible, over FY14 as well?
So we are maintaining 2% gross NPA as on date, and our net NPA is 0.88%. Going forward, I am confident in percentage term it will be maintained. One good aspect of Bank of Maharashtra is not only we maintain the percentage term, but even the NPA level is lower than that of March, which nobody else is able to achieve in the market today. So we are targeting to reduce the level below the last March level for the coming March. I am confident at this point it will be possible going forward, which will bring down the percentages to a much better level.
And could you give us some details on the cumulative restructured assets so far, and also what does the pipeline look for the remainder of this year?
So most of our restructured assets have come only from the state electricity boards. Our corporate book is not very big. Only 37% of my portfolio is in the corporate books. The largest restructured loan in the private, other than the state electricity board, is only 65 crores. So we don't have many in the pipeline which are likely to be restructured. Even in those bigger corporates where restructuring has taken place, our exposure is very limited. So as such, going forward, I don't expect much to become restructured, and the provision requirements may not be very heavy.
Now, if we study the NPAs that you have for the bank, now a high level of them come from the pharma, engineering, textiles and the metals sector. How do you see the asset quality in these sectors then going forward?
The major concern is only on the infrastructure. There is a slowdown which is happening, and there are payment delays which are happening, which brings some kind of stress in the infrastructure, and all of us have a large exposure on infrastructure. This may have an impact going forward unless the payments are released, unless this position improves. Other than that, industry specific, we don't have many concerns other than steel today because of the raw material issues. Other industries, engineering, auto, ancillary, they are all doing well. In our books, 35% of our NPA comes only from agriculture, and 35% comes only from SME. These two segments were historically having that kind of NPA history, but that will be compensated by the pricing which we charge for this.
And Mr. Rajendran, what are the capital needs of Bank of Maharashtra over the next 2 years in order to meet regulation?
For the current year, we will be in a position to manage the capital which we have got. Already we have submitted a requirement of 800 plus crores for the next year. That should be sufficient. If we continue to grow at 30%, probably our capital requirements will be very huge going forward, and we hope we will be in a position to grow. And substantial profit plowback will also take place as profits are growing. We have an internal target of 1,000 crores of our profit for the current year. If we are able to achieve that and retain a major portion of the profit, that will take care of our capital requirements to a certain extent.
And what would then be the guidance for Tier 1 capital as well as Tier 1 ratio, pardon me, and capital adequacy ratios for this year?
Going forward, we would like to maintain at least 9% in Tier 1 and 12% as an overall capital adequacy. That is a comfort level for us. But growth parameters will decide what level we will be in a position to maintain.
And lastly, Mr. Rajendran, your Tier 1 capital stands at just slightly above 7%. What would be Tier 1 and capital adequacy ratio level if the bank receives the respective required capital infusion from the government?
Yesterday, Finance Minister has made a positive note that Bank of Maharashtra is likely to get the capital allocation. I think government has also recognized our achievement in the advances growth. And if that comes, I think this year will be taken care of. The capital market is doing well. Probably we'll think about raising the capital in the market also. Because today 80% is owned by the government. There is a lot of scope for us to raise capital in the market also through rights issue or QIP.